The New York State Common Retirement Fund has a solid track record of exceptional long-term market performance. Part of this success is due to the fund's long-view investment strategy, but there's another unique approach the fund uses: its Emerging Manager Program.
The reason we have the Emerging Manager Program is that we're results-focused. This program has helped our bottom line in very, very significant ways. The numbers tell the story. The firms in our Emerging Manager Program have consistently delivered solid returns.
The Emerging Manager Program provides newer, smaller investment managers the opportunity to invest with the fund. These managers, particularly those of minority or women-owned firms, gain access to capital they otherwise might not receive.
I think the program offers individuals like me, a minority myself, an ability to compete with the big guys.
For an emerging manager, this program is one of the few programs across the country that is dedicated, and so fundraising is very challenging no matter what size manager you are, but in particular for a small emerging manager, it's incredibly hard.
When firms or funds like New York Common actually make a proactive effort to identify, recruit, and give them opportunities to invest, we think it's going to really change the historical imbalance and the demographic makeup of investors in this country.
The commitment to diversity and inclusion is for a very simple reason. It makes sense, it gets for us better results, and we're very, very pleased about that.
Controller DiNapoli cites the work of the Emerging Manager Program as a stabilizing force for the fund. They focus on the smaller ends of the market, investing in business opportunities larger managers may overlook, and by doing so, diversify the fund's portfolio. And these emerging managers are well aware of what their work means for the members and retirees of the fund.
That's who really benefits from these programs. It's the beneficiaries who get, again, good excess investment return as well as an access to new talent.
These are funds of beneficiaries, and what's most important is generating returns. In our view, we think having different managers with different investment perspectives, with a different set of relationships and networks, will actually increase the probability of generating better returns.
Over the long term, the fund's Emerging Manager Program has contributed to the total fund's strong returns. The emerging managers' focus on performance and unique ways of thinking has paid off. In 1994, the fund made its first investment of $50 million in a public equity emerging manager platform. Today, that platform has grown to $1.6 billion. Over the last 20 years, the fund has committed additional capital to emerging manager platforms in the real estate, private equity, and hedge fund asset classes.
Diversity and inclusion has strengthened our bottom line. And when you look at our program and the success of it and the overall strength of our fund, it's proof that expanding opportunities and access to women-owned firms, to firms of color, to emerging managers, it's not only the right approach, but it's certainly the best approach.